HDFC Bank या SBI, Railways या electric vehicle. We'll talk about all this and more than 20 stocks, but I have a small request. Please don't skip parts of the video क्योंकि आप कोई detail miss कर दोगे and then the conclusion won't make sense. With that said, let's get going. Here's an overview of the general trend of sector rotation that I see in the markets. Next couple of months, sideways to slightly bearish रहने चाहिए because of the global geopolitical problems and pre-election jitters, followed by a post-election rally. Just around that or early third quarter, we should have the first central bank rate cuts, and finally, as the global recession really hits, the end of the year or early 2025 could be very volatile. And as we move from one phase to the next, हमें अपने funds reallocate करने हैं to maximize our returns. अभी हमारा सबसे बड़ा trigger है elections, and we all know that BJP will win. But what we need to know is किन sectors को सबसे ज़्यादा फायदा होगा इस जीत से. For that, BJP has highlighted three key policies in its manifesto. The first is electric buses across the country. The second is a gas distribution pipeline, and the third is 3 crore households for the lower middle class. अब electric buses की theme का सबसे बड़ा beneficiary होगा not Tata Motors but Ashok Leyland, and to some extent Electra Green Tech. The reason I pick Ashok Leyland over Tata Motors is that Ashok Leyland का primary business is buses, whereas Tata Motors is very diversified. So obviously कोई भी policy अगर specifically buses के लिए आएगी, तो it will be more beneficial for Ashok Leyland than Tata Motors. At the same time, Tata Motors के अंदर retail exposure has risen a little too much. We have too many small investors in it. So अगर कभी profit booking आई, तो Tata Motors can suffer much more than Ashok Leyland will. I have a conservative target of about 250 for Ashok Leyland, and it's a strong buy for the gas pipeline theme. The biggest beneficiaries would be IGL, MGL, and GAIL. I would keep an eye out on the Iran-Israel war though, because इस sector पे crude oil prices का बहुत बड़ा impact होता है. But with that in the background, my pick would be GAIL, given that it is spread across the country, whereas IGL and MGL are very geographically concentrated. For the affordable housing theme, there are two types of stocks that will benefit the most. The first are companies that will finance these homes for the home buyers. These includes your likes of SBI, Aavas Financiers, and Canfin Homes. The second are the companies that will build these homes, and those include the likes of Hudco and Ashiana Housing. Now I mention Ashiana Housing for a very specific reason. They're located in Delhi, and we know that with Kejriwal ji out of the picture, BJP could come in power there. If that is to happen, BJP would want to prove a point. They've been trying to displace AAP from Delhi for a while. That means a lot of projects will be concentrated in the NCR region. If that is to happen, Ashiana Housing will be a direct beneficiary because they are one of the premier affordable housing creators in Delhi, and that makes it a prime candidate for re-rating. We must not forget the global geopolitical problems though. The Iran-Israel war doesn't seem like it'll escalate, but we still have to be prepared for the two possible scenarios: a cold war and a real war. अब कोल्ड वॉर का मतलब द वेस्ट कीप्स imposing sanctions on Iran जैसे वो कर ही रहे हैं, and Iran responds by choking the oil supply. This is especially important for India because Iran controls the Hormuz Strait, which controls a large portion of the crude oil and LPG supply to our country. Now the other choke point is also controlled by Iran's proxy fighters called the Houthis. So Iran can create a disruption in the oil market for India. But this disruption can benefit some stocks like exploration stocks. For example, ONGC and a small cap gem called United Drilling. I think you should Google it. I really like this company. ये oil drilling के equipment manufacture करते हैं, and they have recently expanded to include Egypt and Libya in their portfolio. With a very small market cap and a strong moat, holding 70% of the upstream drilling market in India, it's a good bet to hedge against inflation. Another company that would benefit would be Coal India, since जब crude oil के prices बहुत rise करते हैं, then countries move to coal as a source of power, at least temporarily. But इस period में there are some sectors to avoid as well, mainly OMCs like IOC, BPCL and Petronet LNG. At the same time, oil consumers like Indigo, SpiceJet and by proxy GMR Infra might also suffer. In सबके margins are directly related to crude oil prices, so if crude oil prices rise, their profits will suffer. Now the second possibility of an all-out war, उसमें ये सारी चीजें तो होंगी ही, additionally basic commodity की prices बहुत बढ़ जाएंगी. And that will create a problem for the Federal Reserve and other central banks, but we'll get into that in 1 minute. For now, let's move to the Federal Reserve rate cuts, which are expected sometime this year. And इसके सबसे बड़े beneficiary होंगे IT stocks and chemical stocks. ये दोनों sectors already बहुत undervalued हैं, so they make good long-term investments anyway. Within IT, LTTS, Infi and Tech Mahindra are my favorites, and within chemicals, I will go for Clean Science, Ether and Archean. LTTS का main business is infrastructure technology, which should benefit a lot from this government's policies. At the same time, Infi and Tech Mahindra are giants who are very undervalued. For the chemical stocks Archean, Ether and Clean Science, I've made many videos about them, so do check them out if you want to. इस situation में एक caveat है though, which is the Israel-Iran war. See, the Middle East is essentially a battleground for the US and Russia, and any war that happens there will involve these two powers, even if only indirectly. Russia and the US will keep supplying resources and arms to these two countries, and that would mean the war will be a long one. That in turn would mean a huge demand for oil, metals and basic commodities, which increases inflation. The end result is that the high inflation would force the Fed to hold rates instead of cutting them. In fact, a Federal Reserve governor recently said that there might be a case to be made for raising rates. If that happens, it will open up a significant downside for the market. All this is a little distant away, but this is something to keep an eye on, वरना बड़ा नुकसान लग सकता है. And that brings us to the dreaded recession. Almost हर major power recession में है, and the US is right at the brink. Now, sometime after the Fed cuts rates, this recession will land, and that would mean a shift towards safe haven stocks. These includes the like of Britannia, HUL, DMart, and Spark. DMart and Spark specifically because they are known to provide essential goods at cheap prices, and companies like that do really well in recessionary scenarios. High dividend utility stocks like ITC and Indus Towers should also do well because as we move into recessionary markets, large investors tend to move to dividend-based income. I do plan to make another video on dividend-based stocks, so please do subscribe so that you don't miss it. The good news though is that India mein recession ke chances are very low unless a black swan event occurs. I would still stay away from export-focused stocks though, which include your IT and chemicals. I would also stay a little away from mid-caps and small caps because उसमें corrections usually ज़्यादा बड़े होते हैं. Now I know what you might be thinking. Tarun, you just told me that IT and chemicals will do well and now you're saying that they might sell off. Well, to that my answer is, it's all about timing. See, now when the Federal Reserve cuts rates, IT should do well, so should chemicals. But as we get closer to a recession, these two sectors will suffer. So you can play two ways. One is we can move into IT and chemicals as a long-term investment and leave them for 5 years. We'll get decent returns. Or the other is we can take a trading bet on these two sectors. So what we do is we buy into them right now, but we sell off as the Fed cuts rates and we move closer to a recession. Then 1 or 2 years down the line, as the recession ends, we can buy into them again as long-term investments. Finally, my pre-recession target for Nifty is 25,000 barring a war in Iran and Israel, and at the end of 2024 or early 2025, I expect the recession to hit, so I would want to be about 40 to 50% in cash. Then as the global economy recovers, I can reinvest my money. I've already mentioned the sectors that should do well through different phases, so all that's left to say is see you next time.